On a property-sized transfer to Israel, the exchange rate is the whole game and the fee is noise. People spend an afternoon hunting for a provider that does not charge £15 and lose 4,000 on the rate without ever seeing it happen because the cost sits inside the number rather than on the invoice. This film covers four things: how to compare quotes properly, who should move the money, what paperwork travels with it, and how to phase transfers against a purchase contract. Four things, in order. How to compare quotes properly, which comes down to a single question asked identically of every provider. Who should actually move the money, because the obvious answer is usually the most expensive. What documentation has to travel with the transfer, and how to phase payments against the contract rather than moving everything at once. Start with the question, because almost nobody asks it in a form that produces a comparable answer. How many shekels will land in the account for this exact amount today, all in? That single number is comparable across every provider. Nothing else on a quote is, not the fee, not the headline rate. And ask all of them on the same day, because a quote from Tuesday tells you nothing about Thursday. So where does the money go? Into the spread. The reference is the interbank mid-market rate, the one quoted in the news. Take the landed amount a provider offers, divide it by the sum you are sending, and compare against mid-market. That percentage is the true cost, and it is the only figure that matters, which is how a no-fee offer carrying a 2% spread ends up more expensive than a £15 wire at a quarter of a point. On a deposit of several 100,000 shekels, 1% is real money, and it never appears on the confirmation. Four routes, described honestly. Your own bank is the simplest and usually the worst rate you will be offered, occasionally worth it anyway when the receiving bank is already comfortable with where the money came from. A regulated currency broker gives the best rates on large sums, holds a rate forward for a contracted completion date, and understands property timetables. Check the regulator in your own country and check that client funds are segregated. Transfer platforms are excellent for ordinary sums, but some cap large transfers or route them in a way an Israeli compliance officer will query. And your lawyer's trust account is not a transfer method at all, but on a purchase it is very often the right destination. There is one tool here that almost no private buyer uses. If you sign a contract with installments running over 18 months while your money sits in sterling or dollars, you are carrying currency risk you never chose and are not paid to take. A broker can fix the rate for a future date, usually against a deposit. That is not speculation. It is removing a variable from a purchase you have already committed to. Off-plan is the obvious case. A 3-year build with installments due in shekels and savings in another currency is an unhedged position running for 3 years. Now the part that causes the most damage when it is skipped. Israeli receiving banks apply anti-money laundering checks to inbound funds, and the question always arrives at the worst possible moment, usually the day before you need to pay somebody. Preempt it. Give your Israeli banker in advance the amount, the date, the sending institution, and the documented source. A short email with attachments before the wire leaves is worth days at the other end. And be careful about third parties. Funds from a company, a relative, or an exchange house are the standard cause of a freeze. An Israeli purchase contract ties installments to milestones: signature, registration of the caution note, mortgage drawdown, vacant possession. Match your transfers to those milestones rather than moving everything at once. It limits currency exposure, keeps the money earning something, and means a delay does not leave you holding idle shekels for months. There is one exception, and it is not negotiable. The first payment should be in Israel, cleared and available, before you sign anything. A buyer who cannot pay on the contractual date is in breach, and Israeli contracts price breach in agreed damages on timing. A bank wire typically takes 2 to 5 working days, often less through a broker. Add time if it is the first large sum into a new account, because compliance will look at that one properly. The rule is simple. Never let a possible compliance query land on a contractual payment date. Work backwards from the date you are obliged to pay. Two things alongside that. An Israeli foreign currency account lets you convert on your own timing rather than on whichever day the wire lands, and moving your own capital is not itself a taxable event. Whether the underlying gain is taxable is a separate question. Four things to have done before you send anything. The quote, a landed amount, all in, from every provider on the same day, checked against mid-market. The route, regulator confirmed, client funds segregated, and a forward rate at least priced even if you decide against it. The paper, source of funds sent ahead of the money, any third-party sender documented, and your banker told what is coming. And the timing worked backwards from the date you were obliged to pay, first payment already cleared in Israel, with a real margin for a query. Off-plan purchases run for years, and the payment schedule is negotiable far more often than buyers realize. The securities, the milestones, and the delay clauses are all worth understanding before you sign the first installment. The written version is on the channel, along with guides on opening an Israeli account and on the purchase contract itself.